I'm a hard asset guy. So it's good news for us, but it's bad news for the boomers. So if you're a stock market person and you're counting on the stock market to keep you alive, you might be in serious trouble.
Hey guys, welcome back to Investing Mentors. Is the market really going to collapse in 2022? Yeah, this is one big thing we're always scared of when we invest in the market. We hear this is going to happen every now and again. For any given instance in history, there is always someone who predicts it is going to crash. And today, let's hear it from Robert Kiyosaki, the author of Rich Dad, Poor Dad. Let's see what he has to say about his predictions on the crash. He really thinks that the market is going to crash and advises to stick to hard assets such as gold, silver, and Bitcoin. Isn't that scary? Yes, it is. He acknowledges that inflation may peak to its highest levels in the coming days. But let's see what Robert Kiyosaki is really worried about and why he is very confident about his statement. And now, onto his interview with Daniela Combone.
I'm a hard asset guy. So it's good news for us, but it's bad news for the boomers. Very bad news. And what's happening is Jay Powell of the Fed is trying to push the yield curve up. But as most of you know, the real yield curve is the euro-dollar curve. It's not the Fed curve. And the euro-dollar curve went inverted. Now, every time that has happened, tragedy follows. So most of us are old enough to remember the last time that yield curve, not the last time, but an earlier time was 2007, the euro-dollar yield curve inverted and the Fed was trying to hold it up. So the Fed's pushing it this way, but the euro dollar is going this way. And that led to the Lehman moment, 2008. So then what happened in 2019, it inverted again, the repo market inverted, the euro dollar inverted, and COVID appeared. So once again, the euro dollar yield curve inverted just recently. And I'm standing alongside my friend Jim Rickards that this next one is going to be the biggest of all. Now, it's good news for some people, but horrible news for the boomers who are starting to retire. So if you're a stock market person and you're counting on the stock market to keep you alive, let's say you're 65 years old and you're going to live to 85, you might be in serious trouble.
Guys, we just heard him talk very seriously about the yield curve and the euro-dollar curve, which has been inverted. Also, this is not the first time. It even happened during the 2008 crash and during the COVID crash too. So what is the yield curve? Let me explain it in simple terms. The yield curve is a graphical representation of the interest rates on debt for a range of maturities. It shows the yield an investor is expecting to earn if he lends his money for a given period of time. The graph displays a bond's yield on the vertical axis and the time to maturity across the horizontal axis. The curve may take different shapes at different points in the economic cycle, but it is typically upward sloping. The eurodollars are the largest trading futures contract by far, but the name is more confusing, right? Eurodollars have nothing to do with currencies. Eurodollar futures are interest rate-based financial futures on deposits in commercial banks outside of the United States. In short, Eurodollars represent a bet on when and how much the Fed will hike up their interest rates. Robert continues to add that the market is going down for sure, as the Fed has no idea about the real situation and is giving false hope to the people. Let's hear it from him.
Well, let me say it again. This book was written in 1848. It is prescient. It is calling exactly what's happening today. All of these baby boomers who have no idea about markets, and they blindly give their money over to Wall Street, who will rip them off. I mean, I'm not against Wall Street. I'm just against corruption. They rip them off. They don't know what's going to happen. And now, exactly as Rickards has been saying, he says the Fed, the most incompetent people going, they're telling everything's going right. Whereas the euro-dollar market is so much bigger than the Fed. The euro-dollar market is the biggest market in the world, and it's just inverted. We're going down. The biggest problem, again, is the euro-dollar system, which is 1,000 times bigger than the Fed, is crashing. Europe is going down right now. I mean, if you see the report, and this is not me speaking, this is the Wall Street Journal talking about it. There's so many rioting going on about this COVID stuff. People just don't want to take it anymore. The uncertainty is too high, so the euro dollar system is trying to go down. But Jim Rickards talks about a thing called Triffin's dilemma. Triffin's dilemma took place in 1944 when the US dollar became the reserve currency of the world. And what that meant was the US dollar was screwed anyway. So one of these, I'm a gold bug and a silver bug and a Bitcoin bug and all this. I just don't trust the Fed. And all these people say, oh, don't fight the Fed, ride with the Fed. They're full of it. And so when I listen to Jim Rickards, it's about Triffin's dilemma. We always have to run a deficit. And now we can't run it much longer. So more than inflation or deflation is that the euro dollar market the index has inverted. Every time that has happened, something bad has happened. That's what I'm concerned about.
So to sum it up, Robert comes up with so many warnings, but all he has to say is that the euro-dollar curve is inverted. We have seen this happen during the 2008 Lehman Brothers collapse, as well as the COVID crash, so he's predicting it to be happening again. Also, as per history, whenever this situation happens, that's the right time to buy gold, silver, and Bitcoin. The hard assets, like Robert Kiyosaki says. As we have seen, history repeats itself. The price of these assets will skyrocket during this crash. To add up, let's hear it from Robert.
But everything's inverting upon us. So just recently, the euro-dollar curve inverted. Every time that has happened, it was followed by Lehman Brothers and it was followed by COVID. And so this one is going to happen again. And that's why I'm saying to people, because I'm a gold and silver and Bitcoin bug, this is a good time to get into gold and silver now. Right now, if you're a boomer, what this guy Marx wrote about was that 50% of our population was shipped from, let's say, proletariat to poverty. That's what he was calling for in 1848. And when I saw 1974 come, and that's when they put us into ERISA, Employee Retirement Income Security Act, or the defined contribution, or the 401k, or the IRA, it shoved all of these amateurs, people with no financial education, into the stock market. And Jim Rickards and I are good friends, you can tell. But when we were kids, nobody was in the stock market. We're in the bond market.
That's right.
Remember that? And he says suddenly they needed to find a way to get some stupid people into the stock market. So they got the 401k, and all the boomers are in it. So we shifted from defined benefit pension plan. So Ford Motor Company has a defined benefit. So Ford Motor stood behind the retirement.
Yeah.
And then when it went to, in 74, it shifted to defined contribution. And I've talked to Jim about this. I said, oh my God, that was the beginning of the end at that point, because it was pushing all of us, us boomers, into the stock market, not the bond market. I'm not buying gold because I like gold. I buy gold because I don't trust the Fed.
So, like you heard, as per his words, a correction in the market is inevitable. This is something I want to focus on. Do not invest in the market if you don't keep track of the market and its current happenings. As of now, investing in hard assets like gold, silver, and Bitcoin should be more wise. As seen on the news, more virus variants have been found. This might affect the market as well. So don't panic about the crash. Even if the market crashes, it has to go up. So stay invested and enjoy the returns. So guys, like this video, subscribe to my channel, share it with people you care about, and tell them to be more cautious. We'll see you in the next video.